How we doing, traders? Welcome to none other than, of course, Stock Market Movers. I hope that you guys are ready to get into the headlines today. This is where we go through the headlines and, of course, bring on our two experts. We got a great one for you today. We got Michael Lee, founder of Michael Lee Strategy. We also got John Savarino, investment advisor representative of Rooted Wealth Partners. We'll talk about Powell's testimony, Airlines cutting, Warren adding on his bet on energy, Tesla, oil stocks keep dropping, inflation, recession, and trust me, there's a little bit more in here for you guys. I'm bringing the value. You guys do me the favor. Throw up the major headline that caught your attention today in the chat. And of course, smash that like button. Let's get it started. Welcome to Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right. Had to change it up. Had to look a little fresh. Got some great guests coming on today. When we got to change it up, we're going to be a little bit, more professional on this show. We have other shows where we do a little bit of live trading action. This show is all about the headlines and the experts. So let's go ahead. Let's get right into the market, see what we saw out there right now. And you guys can see the SPY just breaking down, but a lot of chop action in the early trading. From about 9:30 a.m. all the way until around 11:20, you got about 2 hours of just chop session here in the SPY. And so one thing to keep in mind, and we've talked about it here, is to keep watching that RSI, right? And so that's one area that we're watching to give us signs. Of course, we're not saying that that's going to show us a bottoming action or anything. But today, what do we get? We get a tick right back down there towards the 23.96. So we could crack through there and really start getting to some extreme RSIs. I'm looking to see if we can get down there towards 14 or 15. That's going to really get me another look for another bounce here. But we keep rejecting to get up in there in the 380s. So we'll see what happens here. And definitely to see if we can get the SPY above 380s and actually giving us a roar. All right, let's go ahead. Let's take a look at what happened today. We did get Jerome Powell. He was talking with the Senate yesterday, now talking with the House. And let's go ahead. Let's get some of those comments here. And so one of the things that was clearly said, and this is something that we need to do and must do from Jerome Powell. And one of the things that they're trying to do is what? Price stability. They need to bring it back. And I'll kind of throw back to comments by Mark Chaikin this morning. And he was also stating this, right? It's not like the Feds want just, to see that asset inflation come back. They're trying to make sure that the price stability gets in check here. And so what they're looking for is that, because without it, we're going to be able to not be able to have a sustained period of maximum employment where benefits are spread very widely. So that's their focus: inflation. And they're going to do everything they can to do it. It's something that we need to do and must do. I'll repeat, that was the comments. And this came also after Wednesday. Powell told the U.S. Senate Banking Committee that the Fed was not trying to provoke a recession, but that one was certainly a possibility. And I think this is important to keep on mind, because this is also coming on the heels of Goldman Sachs saying that the risks of recession are high and more front loaded. The main reasons are our baseline growth path that is now lower, and we're increasingly concerned that the Fed will feel compelled to respond forcefully. And what are we getting comments here from Jerome Powell? More and more comments about how they must do it. It's something that we need to do and we must do. I agree with them. We can't continue with the inflation being at where it is today, because I'm even starting to feel it. I think everybody's starting to feel it. And there's surveys out there that, consumers are really starting to get worried about their savings. So we'll keep moving forward. We'll get to the next headlines here, but definitely Jerome Powell repeating and iterating that they need to tackle inflation, and it's something that we need to do and we must do get the price stability back. All right, so let's go ahead. Let's get into the next headlines here. Next headlines are going to come out of the airlines. So United Airlines will cut 12% here. So let's go to UAL here. Let's take a look how the stock is moving right now. You guys can see just pointing downwards. And the real question is, are we going to start going to those pandemic numbers down there towards 27? That's what I'd be watching on United Airlines. It does look really weak here on the RSI, but pointing more to the downside here. They're cutting 12% of their Newark flights in effort to tame delays. One thing to keep in mind, though, the executives did say that the result came from capacity constraints, airport construction, and air traffic control. They tried not to state here that it was the airline staffing shortfalls, but from American Airlines, before this, we had a headline here in American Airlines. You can see it is coming down on the day also. We'll continue to watch that. That's not down too big there. But right now, American Airlines plans to drop service in 4 U.S. cities. And what did they blame this on? Of course, they blame this on the shortage of regional pilots. And so it's really getting difficult out there. And we've seen airlines offering incentives also, trying to get more pilots out there. So the shortage is continuing here for the airlines, and they're suffering on that. Another thing that I think is coming for the airlines, and we'll talk about it coming up probably with coming up next with Michael Lee, is the demand destruction, right? I mean, it really is starting to show on up. And I think that's also what you're seeing a little bit out of these airlines. All right, let's keep it going to the next headline there. Let's go to Berkshire Hathaway. In about 4 minutes, we'll get into our first interview. Let's go and see Oxy. How did it perform here in the opening? You can see we pulled back, and then I had that in the headlines, the energy continuing to come on down. And with that being said, let's take a quick look at the energy outlook. You can see we're down about 4.86% from the open. I always try to refer back from the open because that's what I look for as a trader on out there. I'm looking to see, not necessarily how we were looking overall, but also how do we actually perform from the open. And from the open, energy has gone straight down here today. So another pullback here, and you can see it in XOM, names like Chevron, and of course, Oxy too, pulling on back there. Even though it had a good rise in the pre-market, it had about a 4.7% move there off of the Warren headlines. But you guys, he added 9.6 million more of Occidental shares, now owns 142.3 million. And that's now a stake up to 16.3%. So something to definitely keep on watch. I know a lot of traders were watching it like me. I got caught in some of these trades. I'm going to be honest, hey, it's not always going to be green days. Today was a red day for me. A lot of that was I was looking to see a little bit of a ramp up in the oil action. I didn't get it today, but that's how it goes sometimes. Let's continue on. Let's talk about the other headline that I want to get into before we get into our first guest, because, hey, there's a lot to talk about with our guest coming on up. But let's get into, of course, Tesla factories here. Let's go ahead and put Tesla on up. You guys can see this is pulling on back here. I'll try to take off some of my trading action here so that you guys don't get too distracted on the charts. You guys know my charts. I'm an active trader. I'm looking for this. But Tesla here coming on down here. And one of the comments this morning was that they're losing billions of dollars, right? And so the important thing here is CEO Elon Musk said that both Berlin and Austin factories are gigantic money furnaces right now. Okay. And it should be like a giant roaring sound, which is the sound of money on fire. So Musk is saying this, and he's saying that some of the tools required to make some of the cars are actually stuck in a port in China because of the resurgence of COVID and the resulting lockdowns. So showing more to me, some more of those red flags there, right? And so it's definitely important to keep on watch. He also mentioned that in the Texas factory, they're losing insane money at the moment because of troubles on what? Ramping up production of cars and the so-called 4680 battery, the Tesla's latest technology. And you can see here, a lot of that he's blaming on supply chain disruptions, one thing after another, and we're not out of it yet. that coming from the CEO of Elon Musk, showing us more and more warning signs out there for EVs. And I think this is, not only Tesla, right? Tesla's one of the, at least I would say, one of the auto manufacturers that have been on top of this really and have tried to work around this and still delivering some decent results. Now you're getting more and more, I think, red flags out there. So we're going to have to continue to watch how this develops, but definitely Tesla coming on down there today. And we'll see if we can catch a little bit of a bounce. Can it hold 700 today, or does it close below? All right, I do see a lot of comments in the chat. Want to go ahead and give some shout outs out there. Born, how we doing? Zoltan, of course. Hector. Okay, Chaz, what's going on, guys? I hope you guys are enjoying today's show. Like always, we go into the expert opinions, and that's what we're going to do up next here. I'm going to go ahead and just play a little bit of a promo here, and then we're going to go into it here with our first guest. This is going to be Michael Lee, founder of Michael Lee's Strategy. So let me know that you guys are ready in the chat. Throw some thumbs on up and get those likes moving. Let's get it started.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead. Let's get into our action here. I'm going to go ahead and bring on Michael Lee, founder of the Michael Lee Strategy. Welcome to the show, and excited to have you on, Michael.
Hey, thank you so much for having me.
Definitely. Let's go ahead. Let's dive right in. And so I think everyone, has been taking turns going, into recession or not, going back and forth here. How do you feel about recession and us going into one?
Yeah, so I would say there's a high probability we are already in a recession. Okay. It's unbelievable how quickly it has happened. I myself was shocked to see a contraction in GDP in the first quarter. And it would be hard to say that the second quarter is going much better than the first quarter. And what's ended up happening, in my opinion, is the meteoric rise in the cost of fuel. Okay, so diesel above $6, gas above $5 is translating to everything else, right? They obviously had some supply chain constraints since the beginning of COVID. But right now, you're hearing places like Target come out and warn that they have excess supply and that's going to damage their earnings. So how bad can the supply chain be if a place like Target is worried that they have too much inventory? So I'd say it's the cost of fuel driving everything. My monthly grocery bill since pre-COVID is more than doubled. So people are running out of money, and you're seeing this in the numbers. So consumer sentiment hit an all-time low. In February of 2020, it was at 101. We just printed a 50. And at the same time, you see credit card debt hitting absolute all-time new highs. And the savings rate is at the lowest level it's been since the financial crisis. So, I don't know if it's the Fed coming out intentionally trying to destroy demand, or it's the inflation destroying the demand. But look, there's only two ways to solve inflation: supply and demand. I don't expect more supply, so you're seeing the demand fall off a cliff.
Definitely. That leads right into my second question. And I think you're kind of already alluding it. It is the consumer demand destruction really showing up. And I think that's what we're seeing just hitting the tape. How bad do you think it's going to get, Michael?
Yeah. I'm not sure. I'd say we're already there. The president likes to blame Vladimir Putin for a lot of this. We haven't seen. Well, look, it's disingenuous because what we're going through right now existed before. Okay, the problems from this war is going to come in fertilizer and food costs coming up in the next 6 months, not the food costs that we're seeing right now. So as the this season in terms of the crops that they plant is going to be a lot less than the past couple of years. Is going to create a scarcity factor. It also has driven the cost for the suppliers up. So you're going to really see that coming into next winter. And then, so in my mind, we're already in a recession. And if we're not technically in a recession, it's close enough. It then becomes, how long is this going to last? And after you say, how long is this going to last? It's how deep is it going to get? And what is already priced into the market?
Yeah, and one thing I've been keeping my eye on, of course, is the initial jobless claims. We got a third reading of 229,000. Where does unemployment go from here? Do you see it kind of getting a little bit of a rise?
Yeah, so that's still an excellent number. It's a little bit shocking, but you're starting to hear things like Tesla's laying off 10% of their workforce, right? JP Morgan's laying off a bunch of people in their mortgage departments. All right, you're going to see this slowing effect, and the layoffs are going to happen. So the unemployment rate, it's just distorted. So weekly jobless claims, if you're working as a 1099 employee and that blows up, okay, you're not going to show up in the weekly jobless claims. It's only if you've been with the company for long enough to be eligible to file for unemployment. So that number at 229 is extraordinarily low, and it signals an extremely healthy job market. But when things are going good, and I'm a bull, I like to point to the job market, but the bears and all the skeptics always say it's a lagging indicator. And you know what? I hate to admit that they're right. So I could see that number more than doubling over the next 6 to 9 months. And then from there, it's kind of anyone's guess to how long this is to take out. So, I'm in my early 40s. Okay, I started working in finance and Wall Street like right at the in the summer of 2001. I worked in retail banking for a couple of years before that, but witnessing the dot-com boom. So that recession from call it 2000 to 2003, 9/11 was right in the middle of that and made that much worse. So then you have the financial crisis, right? This is nothing like the financial crisis because that was the largest consumer debt bubble we've ever seen that's out there. And people are going to say, oh, well, look at the sovereign debt bubble we got right now on the Fed balance sheet. Like, listen, that's not going to, like, they're just like, that's got a long way to go. And once inflation gets under control, the money printing and the debt printing will continue. So to kind of work our way out of this, we just really need to crush inflation and crush demand. Then I think the economy will get back to its kind of slow anemic growth.
Yeah, it definitely, one of the things that I'm watching is when will inflation really start showing its peaking? What are you keeping on watch to show you that inflation's starting to give us that sign?
So month over month core CPI. All right. What and core CPI is a bit of a cop out, if you will, because it doesn't include food and energy. But you got to understand, historically, if there's a bad storm and the price of oil spikes, you really don't want to include that. That's a one-time event. So right now, I do think energy is driving most of the cost of inflation and is really leading to a massive slowdown because of how much it has grown, how much the price has gone. I mean, in COVID, what we're paying for a gallon of gas, $1.50. Now it's $5 and change more places. I think we could handle $3, but look, we'll see where that goes. But I think we got to be close to peak inflation, but that doesn't mean it's going to go down. And unless we have a horrific recession, which I don't necessarily see in the cards, I don't see prices necessarily going back down.
Yeah, it's interesting to watch. Do you think that the Fed kind of pulls back on these interest rate hikes if we actually start seeing inflation peaking?
Yeah, so that is the question. I think once the market, not when the Fed pivots, when the market anticipates the Fed pivot, that's right. That's probably where your bottom is going to be formed and where equities are going to take off. And it's I know you got a lot of individual stock pickers on here. What I would say, when rates are going up and when the economy kind of stinks like it does now, it almost doesn't matter what you buy. It was, I heard you talking about the oil trade, which has been kind of my savior for my clients this year. It's given back now. I do think that's cheap at the moment because the curve is still in backwardation. But once the market turns, you kind of buy anything and you're going to be good for the next 4 or 5 years unless you have something that blows up. And so when it's this multiple expansion and contraction, and when it's an easy Fed growing economy, you have a multiple expansion. So company doesn't need to make any more money. The stock's going to go up. And then on the flip side, everything contracts. So I would say, I don't know that we're there yet. I could see us getting there some point this fall, latest probably next spring, unless obviously something else could come along and derail the economy and take this longer. Hopefully not like a 9/11, but the 9/11 would be, that type of exogenous event that really just throws, junk in the gears of the economy getting back on track.
Definitely. Now, of course, I'm sure that the audience is wondering, so where do we hide, Michael? Is there an area to hide now?
That's the question. And, I think the answer this year has been gold, even though gold hasn't done that well relative to the S&P 500. So my major longs this year, and I'm primarily an ETF player because it's easier to manage, easier to navigate and manage risk on a holistic basis with large positions for clients. My largest positions are XLE Energy, XLU, utilities, and XLP consumer staples. Until the last couple of weeks when energy has fallen apart, that has been a good one. And if you haven't participated in energy, you're still buying, especially now with the sell-off, you're buying at market or below market multiples with high dividends. The companies are producing an extraordinary amount of cash. And the other one to look at is the OIH, which is the oil services sector. It plays into Warren Buffett's announced purchase that you were talking about earlier. But I think it's almost time to start picking out some of these big tech names. So you think about a Google and Apple and Amazon, okay? All those peaked in the fall, November 2000, they bottomed in November 2008 when the market bottomed, or in November, December, where the market bottomed in March of 2009. So the kind of the highest quality, best companies positioned for growth going forward. That's what you kind of want to be look at if you're looking for outsized returns. I think the cybersecurity space, what's the NASDAQ down year to date? 30 something percent.
Yeah.
CrowdStrike and Palo Alto are only down 15. And these are high multiple companies. They've really withstand that. And you have the bulk, tons of NASDAQ down 70 or 80, 90% from their March 2021 highs. These companies have held in there. So what typically wins in these coming out of these environments are companies that are massive cash producers. So your Salesforce, the last go around. These are the kind of growth names that you can get into. And I would say going into the end of the quarter, you have an extremely short hedge fund positioning. So you have as bearish of the fear green index. I don't think it could go any lower than it was a few days ago. I believe it was almost at zero. And then you have hedge funds really short the overall market. And I'd say a lot of large institutional investors are facing massive redemptions at the end of the quarter. And I'm hoping that's the reason why my energy has gotten crushed, because it's been the big winner.
Taking some profits, right?
Yeah. You don't sell, if you've been lighting up on all your other positions all year, and then now you have massive redemptions, you start to sell some of your winners. So I'm hoping that's it. The people that trade oil on a daily basis don't think we've seen peak oil. The curve is in backwardation, which means it costs more to get oil today, which means because oil this year has been a supply demand story. So when the curve is in backwardation, that means it's more expensive to buy it today than it is a year from now, because they believe supply will lighten up. Typically, you pay more a year for a year from now because that oil has to be stored. So while we're in backwardation, I still like those names. They're high yielding names, but I think over the next week, you could see a 3 or 4 or 5% bounce in the overall markets as you get a little bit of a short squeeze and you have some pension fund rebalancing based on the poor performance in equities.
Definitely enjoyed you coming on today, Michael Lee, the founder of Michael Lee Strategy. Definitely check him out, guys, on Twitter. You guys can find him at Michael Lee Strategies and give him a follow. Appreciate you coming on, Michael.
Thanks so much for having me.
All right, guys, like Michael Lee said it, and I think he said it perfectly there. We covered a lot of things, from the beginning of the consumer demand really kind of showing us. And like he said, it looks like we're in a recession right now. That's the way I feel too. I mean, especially when you're seeing those low GDP mentions. But we're going to keep going here. We'll get into some more headlines. And then at 1:45, we got John Savarino, the investor advisor representative of Rooted Wealth Partners. So stick around for that, guys. Do me the favor, if you guys are enjoying these interviews and enjoying how we're going about it here on Stock Market Movers, hit that like button right down below, and let's continue right here. All right, let's get into the next topic here. We already touched on Tesla. We touched Berkshire Hathaway's buy. We talked about the American Airlines and United Airlines kind of doing some cuts out there. Definitely stay tuned, but let's get into a little bit of some earning action. Let's go towards Darden. We could touch a little bit of Darden and, of course, KB Homes. So let's get into that. Like always, guys, one of the things that we're going to continue doing is touching the headlines. So let's get into that. Here you guys have Darden kind of pulling back here. And I mean, this kind of looks like an hourly pullback. It's not hasn't broken those hourly lows. So in my eyes, it just looks like a nice little pullback after some good earnings. But let's go ahead and let's give those earnings. They also announced a $1 billion buyback here. Darden Restaurants Q4 EPS at $2.24, beating the $2.21 estimate. Sales were at $2.6 billion, beating the $2.54 billion estimate. So you guys are seeing some good numbers out of DRI, guys. So let's go ahead. We'll see what's going on out there. Definitely going to go ahead and catch some of these ratings that are out there right now, guys. If you guys haven't seen those, I would definitely go ahead and check that out because the ratings are coming out. And a lot of that is whenever we see these kind of market bounces, the ratings really start flowing. So keep your eyes on some of those. I saw a lot mentioned on Snowflake out there, but let's go to KB Homes here. All right. So KBH, I've been watching KBH start making a move after we got Lennar's earnings earlier on. And you can see here, Lennar really been pushing on up. So let's go back to KBH and check out how we did today. Nice little rise there. Not a bad little play. If you take a look at some of the other names, it looks like we had all green in residential construction. So definitely some relative strength showing up in residential construction after the Lennar earnings. And then you're now getting KBH. They got Q2 EPS $2.32, beating the $2.01 estimate. Sales were at 1.72 billion, beating the 1.63 billion estimate. So KBH, not a bad little move there. We'll see if this can continue. Let's take a look at the daily chart. You're seeing it kind of get a little bit of a rounding bottom, getting back there towards the 30. I think you might run into some resistance closer towards 29.36 and up there towards 29. So we'll see if it can get through that level. Right now it's at 28.37, and we'll see if KBH can continue making a lift. All right, let's go. Let's get out of KBH. Let's talk a little bit about Snowflake. I know that a lot of people were watching Snow this morning. We were even watching it on live trading, and you can see how it kind of just pushed right out the gates here. Even though it had a really strong pre-market, it already was up around 6%. And then Snow making a nice move today. You guys can watch this also with some other trades. I like to watch Snow with Unity or Roblox. But let's go ahead. Let's take a look here. What happened here? JP Morgan upgrading Snowflake from overweight to neutral, said that the company is reaching an inflection point in terms of material free cash flow generation. What we have been talking about here consistently is cash flow is king right now, guys. When you hear mentions of cash flow and you hear the analysts mentioning this, this should sound the alarm for you to definitely keep this on your radar. Like always, you guys make your own investment decisions. But if we're getting the green light here and it's about cash flow, it's something that I'm definitely going to keep on watch. And you can see mentions on other ratings today. Do you see mentions of cash flow and something that I would keep on watch out there? Another one that kind of came down from the kind of peak of kind of every speculation stock sometimes is Revlon. Revlon coming down there after making some huge gains, right? Revlon slid about 12% following 3-day really win where it kind of went up like 500%. The real question is what happens with Rev? There's a lot of rumors on out there that someone's trying to get this, after their bankruptcy Chapter 11 filing last week. We'll keep on watch, but also, what should we also keep on watch? Do we get any more bankruptcies? Because I think this is something definitely that we got to keep on mind right now, is that some of these companies are going to go to zero. And I mean, I'm not doing this to try to create some FUD out there, but really what I'm trying to do is try to talk about what potentially could come from these companies that are really low. We've seen a lot of these companies start going into some cash struggles. And as interest rates continue to rise, it's going to be harder and harder to raise that equity. And especially at what valuations and what dilution do you bring your shareholders? So keep this in mind, especially as we continue on this battle here. We'll see what happens if Revlon can continue to go. But hey, let's go to Funko here, guys. So I want to go to FNKO here. Funko getting a little bit of a lift here. Not a bad little move there. Shares of Funko, the maker of vinyl figurines and bobbleheads. They're kind of like toys and collectible toys. It was jumping after JP Morgan upgraded the stock to overweight from neutral and said that the stock has upside even as economic growth slows down. Called the toy industry a safe haven. So JPM Morgan trying to step up here, talking about this is a safe play. I'm going to have to ask my man Chris Ketchy, because he's all on Funko. I go to him. He's my Funko expert. So I'll ask Chris Ketchy and look forward to maybe getting Chris Ketchy on here, as I look forward to I know he covers Funko. He's probably already covered it in an article. I'll go ahead and I'll ask him, and who knows, maybe I'll bring him on tomorrow to talk to us about Funko. All right, let's continue going here. Let's get into all the headlines, because that's what it's all about. We did see a stock kind of get a nice little rise today. It was RAD. This was also based on earnings, so not a bad day there for RAD. And you guys can keep watch. Pharmaceutical retailers were doing really well. You can see here, we looked at pharmaceutical retailers. The industry was up. So one of the ones that I'd be watching with this RAD is, of course, you guys can keep on watch WBA, Walgreens Boots Alliance. It's pulled back now after a big push right out the gates here. So we're going to take a look to see if this can get back up. Of course, it's probably having to do with the SPY dragging a little bit. Still seeing some sideways chopping action here in the SPY. So just be careful out there as we continue to watch what happens in the overall market and if Rite Aid can continue to go. But they did report better than expected revenues and smaller than expected quarterly loss here for its most recent quarters. So Rite Aid getting a nice little lift after this one has been really pounded on recently. You can also see what an inverse head and shoulders here. So I like to call out patterns. That's what I always look for as a trader. That to me looks like an inverse head and shoulders getting on up there. We'll see if it can break through 8. That's going to be an important price point when we get up there. All right, let's continue going into other questions here. If you guys got a stock or a headline that caught your eye today, definitely throw it up in the chat. Let me see how the chat's doing. I don't get too often a time to check out the chat in this show because I'm going through so much, but better relations to have better, stabler market moves. Yeah, let me know how you guys feel right now, the Fed's reaction. And of course, the comments coming earlier, we talked about that. Jerome Powell reiterating that it's something that we need to do and must do is restore the price stability. I see a lot of talk in the chat about that, and excellent interviews. That's what it's all about. We're going to be getting into another interview coming on up at 1:45 with John Savarino, the investment advisor representative of Rooted Wealth Partners. I'm excited to go ahead and get into him. He also has a YouTube show. So we're going to go ahead and I'll go give you guys that. Talking Money. So if you guys haven't heard Talking Money, you guys got to check that on out. I caught his recent one about how to pick stocks. So stick around for that interview. I have a feeling we're going to have some great conversation. Let's go ahead. Let's keep going. I see AMC mentions in the chat. I saw it trending in Twitter. So I'll take a peek. I'll take a peek for you guys. I don't get it too often a chance, but look how AMC breaking down a little bit out of this kind of, we could call it a descending triangle. You might call it I'd still call it a descending triangle here. You could see here how we're kind of trying to get back on up here. fighting every time we get to 13. And so until we get back above 13 for me on AMC, I would not even look to it towards the upside. A lot of this is what? Right now, we're finding more and more falling knives. And when we're finding falling knives, we really need to see a continued breakout. And another thing that you see here is that kind of fake out candle that you got on Wednesday where you go up to 13.22, but where do you close? You close there at 12.48, giving you that kind of fake out look. And a lot of this is happening, with a bearish overall trend. And so I'm really looking for strength coming in here, and it's just looking like it's not. Another thing to keep in mind is look at the volume just declining out here. And we're not in extreme moments here in the RSI. We're just in the middle. And when I feel like we're in the middle of the RSI, you don't have kind of edge by using that at all. So we'll keep watching here. One thing also to mention is how the ATR is coming down here, showing you that the volatility is slowing down in AMC. That doesn't really help because you're looking for what? More than likely, if you're watching AMC, you're looking for that short squeeze type of action, right? And so you need kind of that volatility coming on back. I'd keep on watch also in ATR to see when you start getting that volatility back, do you get that kind of squeezing action? We'll see what happens on AMC. And for that sake, I'm sure GME's down also. So I know that the chat probably was taking a look. GME's holding on a little bit better, but we'll see what happens here. All right, last one I'll get into. Then we'll go towards our interview. I did see GGPI, a lot of mentions on this one as it switches on over. Chat, if you guys can help me out, I know you guys probably know this. What's the ticker that GGPI is switching over to? I know it's with Polestar. But I did not catch at least I did catch it, but I don't remember the ticker there. But one thing to keep on watch is when these stocks kind of come on over and they transition from SPACs to de-SPAC, you often get this kind of boom. We used to have this in the SPAC industry consistently. Now you're seeing it in GGPI. A lot of that is what? There's a lot of people stuck also in GGPI at, let's say, above $10. So this actually traded on up here on the kind of the announcement of what was going on to 1640s. So just be careful here now. It's going to definitely probably get a lower float. Also, we don't know when the redemptions are coming on in, but a lot of times this happens with these SPACs. We saw it in Redbox, how that started really moving. So take a look at this. We'll see what happens. But what happened to Redbox also? A nice little boom, but also came back to that $10, just pointing out a little bit of risk out there. So you can keep these on your watch, but like always, just be careful on out there. GGPI, I do believe in the long run, not a bad company. Polestar definitely has vehicles out there. I'm sure you guys probably have seen one of them, but we'll see what happens. Looks like the ticker will be PSNY there. So keep this on your radar. We'll see what happens there. All right, let's go ahead. We're going to get into it with our interview coming on up. Like always, guys, we get towards the experts. That's really what it's all about. So let me know. Smash the like, guys, if you guys are excited to get into our next interview here. I'm going to go ahead and play a small little commercial, and then we'll be right back with John Savarino.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
Yes, that's what it's all about here at Benzinga. We're going to get into it, continue here on Stock Market Movers, but really this show is all about the headlines. And one other thing is our two experts that we try to bring on to you guys every single day because, you guys get enough of my outlook, but I want to go to the experts to keep you guys in the informational edge. Like always, guys, this isn't investment advice, just for educational purposes only, but that doesn't mean that we're not going to get to the good stuff. So let's go ahead. Let's bring on John Savarino here. Welcome to the show.
Money Mitch, appreciate that. I feel privileged to be here and looking sharp, man. I see you dressed up for us today.
You see me? I'm rocking a little extra here. Normally, I'm more of a t-shirt kind of guy. I mean,
I
I
noticed.
like to stick to my retail traders out there, but at the same time, I can clean up. I can clean up.
Amen. I didn't know if I was gonna wear the jacket or not, but I seen that, so it was a no-brainer.
Hey, love it, love it. Looking good. Let's get into it. This is the investment advisor representative of Rooted Wealth Partners. I'm excited to dive on in. One of the things that I will give you guys is check out on YouTube Talking Money. If you guys want to catch John, I did catch your how to pick stocks, and I think it was interesting, because we're getting this question consistently. And then on here, we talk a lot of kind of more, micro catalysts and stocks. And I don't shy away, as you guys see, talking about AMC and GME. But one of the things that you mentioned here is long-term buys is looking at it kind of in the Warren Buffett approach in stocks and companies that you use. Talk about this and what kind of companies maybe that you use that we should maybe take a look at.
I think it's a great question. Obviously, just a fun video because I think over the last couple of years, trading as a whole has become really prominent in the media and social media, for example. But it's really difficult, and I think when you have a really long time horizon, just buying companies like I think you know this from my video. It sounds cliche, but Apple's my favorite company and favorite share to own out there. But I'm on a Mac computer. I have an iPhone. I think from a fundamental perspective, they're a really good company. So it's an easy buy for me. And you get a little pride, in owning, shares of the companies that you're giving back to or that you're using. And I think even like on the consumer level, it was interesting to hear Mike's, take on Target. But Target, for example, like I swear everyone just loves Target so much. What a great company to own in your portfolio, for example, using that Buffett strategy. But definitely just a fun video because a lot of folks, tend to overthink or overcomplicate long-term investing.
Yeah, I have a friend that we host a show, Pre-Market Prep. We got to get you on there too. And on Pre-Market Prep, Joel says kiss a lot, right? Keep it simple, stupid. You know what I mean?
Amen.
Yeah, definitely. Sometimes you overcomplicate things, and I love that approach of looking at companies you use. We talk about often the thing behind the thing, also. So that's an interesting trade too. Is not only what you use, but maybe what's behind the company that what you use there. But let's go ahead. Let's look at some themes. I'm thinking long term here. Nothing short term because we still got to get around this whole kind of market environment. But what do you like out there? Do you like maybe EV in the future? Do you like more infrastructure picks in the future coming up? Is there any theme that you're looking at?
I think EV, if you have a really long time horizon and, you're a patient investor, I believe, right? My opinion is that will play out quite well, especially if you take a really broad exposure, a broad approach to EV. But I think those that are looking for just a really short term, gain on EV, I think you're lying to yourself or you're kidding yourself. I think there's a lot more to it still to come when it comes to EV. I think, there's a few companies that are on my radar very long term, or at least over the next several years. I think one that's going to surprise maybe a lot of folks is like Take-Two Interactive. That's something that I've been watching closely for the last year. And really, I started dollar cost averaging over the last few months. I really like the fundamentals behind them. I'm not sure what the charts look short term or long term or anything of that nature, but I think one really fun component to Take-Two is when they release their notes for the next year, the next fiscal year. They earmarked a hefty budget, like a 10 times multiple marketing budget for I think Q2 or Q3 of 2023. And I think a lot of us know like Grand Theft Auto, that video game series, and they've kind of announced that that's in the works. And I think that's going to propel that stock for at least a few years. So that's one of my favorites. I think from like a value, even like an industrial type play, still love John Deere, love Caterpillar. I think we've seen, some sell off over the last 3 months, which once again, if you're dollar cost averaging, you should be really excited about that. And even like financials, I think those, I'd be picky with financials, but love Bank of America. I think SoFi is a massive sleeper in that fintech financial kind of realm, in my opinion.
Yeah, honestly, and we did get comments in the chat. So, what would be like a long-term horizon if you're looking at these types of play? Are we talking 5, 10 years?
Yeah,
Probably,
I would consider 10 years a long time horizon, or 10 plus years. Let me clarify that.
Perfect. I mean, a lot of us are in this probably mode right now. I mean, there's a lot of investors that came in with the 2020 movement, and we're all looking towards how do we attack, of course, retirement, right? And so if you have that kind of outlook and you're looking, 10, 20 years down the line, that's what I also consider kind of that long term. Let's go towards the next question here. So we've seen more and more of growth at a reasonable price, GARP plays being mentioned. Is there any that you like out right now?
That's a great question. I mean, I think there's a lot of growth opportunities out there right now to be buying. I think a lot of it's got quite slaughtered, year to date for the most part. Actually, so there's our portfolio strategist, Jackson. He's on our team, and he handles a lot of the advisory strategy work. And he has this theory of these pandemic stocks that became prominent, such as Zoom, DocuSign. Those companies had been around for a long time, but those have gotten really beaten hard recently or over the last several months. And I think some of those companies, according to his theory, they'll hold strong, moving forward. So I think those are some good growth companies to be looking at. But I think, mega cap stocks in the tech industry or the tech sector, like there's, once again, going back to like my dollar cost average comment, like those are really good deals at this point, in my opinion.
No, definitely. It's something to keep on watch. I think as we keep watching, the markets coming down, earnings kind of coming down also, I think it's something to keep watch some of these GARP plays because, I mean, let's just be honest. I mean, we all want some kind of growth in our portfolio, but it just hasn't been that kind of year for growth. What do you need to see for confidence that we, either are having our capitulation moment or that we've actually had kind of a bottom put into the overall market?
Well, I don't think we're there yet, unfortunately. I wish I would say I agree with kind of your comments and Mike's comments earlier. I think it's too early to quite say that we're in the recession, but I mean, if Q2 data comes out and we're negative, I think it becomes, quite obvious at that point. I mean, I think inflationary data, I mean, inflation has to come down to have any type of positive sentiment, moving forward. I think, the stock market as a whole is a leading indicator, of our economy. So it'll be hard to, in essence, identify that bottom because of it. But I would not be surprised if we're not that far away. We're not that far away from it.
Well, you guys heard it here. John Savarino, the investment advisor representative of Rooted Wealth Partners. And please, guys, do me the favor, reach out to him, give him a follow on Twitter. That's just at your name, right?
Easy
right?
enough.
Easy enough, right? Let's keep it simple. All right, guys, you guys check him out and definitely check out Talking Money on YouTube if you guys want to get some of these quick wrap-ups. I like that they're quick too because I enjoyed catching them.
I just try and make them fun. Just try and make them easy to understand. And if anyone ever has any, any ideas or feedback or want me to talk about something, I'm more than happy to. And I agree. I'd pick Microsoft over Zoom in the comments there.
Let's go. Thank you for coming on, John. We'll definitely have you back on. It was definitely a pleasure.
Mitch, such a pleasure. Thanks so much.
All right, guys, that's probably going to do it for us here, but we're going to start wrapping up in a little bit, but we got a little extra time. So I want to go ahead and kind of do a little bit of a deeper dive. If you guys got a stock you guys want to check out, I got no problem of checking out a stock, but right now I'm really keeping my eye on the oil game because we've had some kind of decline here. And, at least from what I've been hearing on the oil trading side, they're still looking for that upside. So what's going to happen here? I also hear comments, of course, Biden mentioning kind of the oil tax kind of reduction, still battling with Congress on that. But I don't think that's going to really change, right? I mean, you're affecting the price, but you're not affecting really the supply there, right? And so I think that's what we need to keep on watch. How does this really develop and go into winter? Because a lot of us are probably seeing a little bit of a rise in energy prices, in your water prices, and a lot of things. But the question is, does it ramp up into the winter? I'll throw it to you guys, chat. You guys put up a 1 if you guys think that we'll get a ramp up in energy prices in our utilities going into winter. Of course, not just because of winter, but an exuberant spike, something that you really are like, whoa, we're talking, where your energy bill goes up maybe 100%. That's what I'm worried about. I mean, I'm glad I'm out of Colorado because the natural gas and kind of heating up those furnaces was getting pretty expensive there. Something to keep on watch. We'll take a look at oil here really quickly. Let's take a look at the sector overall. I've been watching my eyes on this, lost a little bit on it today, but that doesn't mean that I'm not going to keep watching this. Look at this pullback that we've had now. And so let's go ahead. Let's do a little bit of some fib action here. We don't do fibs often, but I'll go ahead and I'll do it here for you guys. Let's do it from the bottom of the move up there towards the breakout, and then it pulled back here, came back, gave you that throwback look. Let's look for the 50%, see how that's acting. And you can see here, we've broken through those lows. So it's further pullback than that. So let's go towards the next level of the drive here, which I'm going to pull it back towards this drive here. And you can see here, we've even broken the 61.8% retracement from that level. So definitely we've gotten a little bit more than I would say a correction in energy. But does this turn around? So I'd keep this on watch. You know, one of the things is we've had that pullback. You can take a look at XOM. I'm keeping an eye on ExxonMobil to see when do we catch really that support. It could come back into that monthly kind of 9 EMA. Right now, the weeklies are pointing that pullback. It's been a little bit excessive. We will see if this actually starts coming back or we get complete demand destruction in gasoline just because of the price. But like always, I mean, I know you guys are probably like me. You're stuck on buying that oil no matter what because you got to get to work, right? And so we'll see what happens. Let me see in the chat. What did we get? I'm still investing in Bitcoin. Hey, Calvin, can't blame you in trying to take a shot. I will be looking at Bitcoin also. I'm just looking for about 86% retracement from the high of that 60,000 down there around 10,000, 9,000. That's where I want to see it kind of get in between, and I'll take a shot also. I hope you guys enjoyed it. Cash Reward Network said great analysis. I hope you guys have a great one. I'm going to actually get on out of here. We'll see you next time right here on Stock Market Movers, where we cover the market headlines. We covered everything today on my list. I went through Tesla. We went through United. We went through Jerome Powell's testimony, Airlines Cutting, Warren adding to his bet on energy, Tesla, oil stocks keeping dropping, inflation and recession. We covered it all. So let your friends know this is where you guys want to catch some quick action, 1 hour where you get all the headlines plus 2 experts. So please give me a thumbs on up if you guys enjoyed today's show. Hit the comments after. Let me know what you want to see more. Or maybe there's someone that you want on this show. And if you've seen them on some other networks, don't worry. We can get them on right here on Benzinga. Let me know. Hit the comments after, and we'll definitely get them on. I'll see you next time, guys. I'm Money Mitch, and this is Stock Market Movers. And let's keep it going, guys. Like always, smash the like.
Check.